Okay, so good morning again, everyone. So, in this video, we will continue to discuss our topic on bonds payable. So, basically, the last time we had our discussion, um, we tackled all about the basic concepts on bonds payable. Okay, and for today, we will put into application all those concepts, especially in how we should apply those in regard to accounting recognition. Okay, so let's begin. Okay, so accounting for bonds payable. Okay, accounting for bonds payable. Generally, there are two accepted approaches. Okay, there are two accepted approaches. We have the memo entry approach, okay, and we also have the journal entry approach. Okay, so basically the difference between the two is that they differ in the treatment or in the accounting treatment during the time or the period of the bonds being authorized for issue. Okay, so in that sense, under the memo entry approach, okay, when we are given the authorization to issue bonds, okay, per accounting recognition is that we should just make a memo entry. Okay, our memo entry would detail or would specify the details of the bonds authorized for issue. That is, what is the value of bonds authorized for issue, the interest rate, the term, the denomination unit. Okay, so those are the things that we should make or we should put into our memo if we recognize the authorization, okay, the authorization as a memo entry. Okay, um, the journal entry approach on the other hand, okay, the journal entry approach is that there is a formal journal entry. Okay, there is a formal journal entry made to recognize the authorization of the issuance. Okay, there is a formal journal entry um, to the authorization of issuance. So the journal entry basically is during the time of authorization. Okay, during the time of authorization, there is a debit of the account unissued bonds payable. Okay, and a credit to authorized bonds payable. Okay, the amount of this basically is the value of the bonds which we are authorized to issue. Okay, when we issue bonds, okay, the issue price basically is debited to cash, and the credit would go to unissued bonds payable. Okay, the credit would go to unissued bonds payable. Okay, now under the memo approach again, okay, under the memo approach, on the date of authorization, again, memo entry lang tayo. Okay, memo entry. However, on the date of issue, yung ginagawa natin dyan, basically, is itong, kumbaga, yung pinaka-common na approach, which is to debit, cash, credit, bonds, payable. Okay? So, that is why class, no? That is why. Under these two approaches, um, the most common being used because practically mas madali siya, less yung monitoring is itong journal entry approach kasi nga um, this is the usual way of recording cash credit to the liability account, which is the bonds payable. Okay? Under the journal approach, same pa rin yung concept. Okay? However, the credit would go to unissued bonds payable. Okay? Then, we should recognize the entry for the authorization. Okay? But, let us take note no, whatever approach that we use, okay, whatever approach that we use, itong dalawa, okay, the memo entry approach and the journal entry approach has the same effect, okay? Same pa rin yung mapipresent natin as liability, same pa rin yung mapipresent natin na carrying amount of the bonds, same pa rin yung mapipresent natin na discount or premiums on bonds payable, okay? So, that is the two approaches. Now, in our discussion for today, okay, we will just use for simplicity, okay, the memo entry approach because again, that is the approach which is basically common in practice. Okay? So, let us now go on how do we record bonds payable using the memo entry approach. Okay, using the memo approach. So, our first exercise or our first problem, no, illustration is issuance of bonds at a premium. So, we have this example now. On January 1, 2020, RCC Corporation, okay, or RCC, issued a bond with a face amount of 5 million at 104. Okay, diba? Again, based on our previous discussion, if the issue price or basically the stated price in every issuance for bonds is generally stated yung parang whole figure. But then again, we have to remember na this represents a percentage. Okay, di ba? This represents a percentage. So that means na if we have a face amount of 5 million, okay? If we have a face amount of 5 million, then it was issued at 104. That means na it was issued at 104%. So, the total issue price for this particular bond issuance is basically computed as 5 million times 104%. So that would be 5 million 200. Okay, that would be 5 million 200. Okay, so if you may notice, um 5 million 200 is higher than the face amount of 5 million, diba? So, there is a difference of basically 200,000, diba? There is a difference of 200,000 now. This 200,000, this is your premium, diba? Premium on bonds payable. So again, there is a premium if the issue price is higher than the face amount. So this is your premium. So to record that transaction, basically, we should debit cash at 5.2 million, the issue price or the proceeds. Credit the premium at 200, then credit the bonds payable at face amount. Okay? Credit the bonds payable at face amount. So you have to remember na regardless of the issue price, the credit to bonds payable is always at face amount because ultimately, at the end of the term of the bonds, yung face amount yung babayaran natin. So that is basically our liability. However, if we are to be asked what is the fair value of the bond on the date of issue, that is basically equivalent to the issue price or the present value, which in this case, the market value or the fair value of the bonds on January 1, 2020, that is 5,200,000. Okay, that is 5,200,000. Okay, so recap lang din, okay, just a recap lang din, di ba? If bonds are issued at a premium, the nominal rate basically is lower than, is the nominal rate or the stated rate, which in this case is 8%, most likely is higher than our effective rate, diba? Because it is a premium. If it is a discount, the nominal rate, okay, is lower than our effective rate, or the effective rate is higher than the nominal rate. Okay, so that is the concept. Okay, now, so after recording this on initial recognition, okay, because the stated, based on the stated price at 104%, okay, on December 31, 2020, we should recognize the interest. Now, if you may notice, our entry on December 31 is a credit to interest payable, December 31, 2020. Why? Because basically, our interest, as stated in the exercise, will be paid on January 1. So that means, as of December 31, 2020, wala pa tayong payment. However, we have already incurred the interest expense na for applicable for 1 year. That is from January 1 to December 31. So we need to recognize the interest expense accrual. Okay? So again, the initial interest that we are to recognize is based on based on nominal rate at 8%. So that is, if we are to compute that, the interest expense that we are to accrue is computed as face amount, the 5 million, okay, multiplied by the rate, 8% per annum, for 1 year, kasi yung annual yung recognition natin. So basically, that would be 400,000. Okay? So, the entry for that, no, is typical entry if we are to accrue interest. So, debit interest expense at 400, then credit interest payable at 400,000. Okay? Now, another entry that we are to recognize on December 31 to be congruent with the recognition of the expense, okay, to be congruent with the recognition of the expense, is the recognition of the amortization of the premium. Okay? Now, in this illustration, because yun nga, simple illustration pa lang ito, the straight line method was used daw per data sa exercise natin. Okay? Per data sa exercise natin. So, that means, kung straight line method siya, okay, the total amount of premium basically is just to be divided sa term na loan, which is, in this case, ang natin is for 5 years. Diba? 5 years. So, under the straight line method, the premium, which is amounting to 200,000 divided by 5 years, okay, the annual amortization of the premium basically is 200,000 divided by 5. So that is 40,000. Okay? So, in recording this 40,000, okay, or if we amortize a premium, basically the amortization of the premium would go to debit on, or or to be debited to premium on bonds payable. Kasi nga, di ba, if we understand this transaction, the recognition of the premium was credited. And if we amortize, basically, the concept is, di ba, dapat babawasan ito with our amortization. So, pag babawasan natin itong premiums natin, obviously, the amortization would go to debit. So, debit premium on bonds payable at 40,000. Okay, at 40,000 now. The credit of that, basically, yun nga, based on our previous discussion, any effect of amortization for discount or premium basically would go to the interest expense. So, in amortizing a premium, di ba, again, based on our previous discussion, the effect of premiums, basically, it is a deduction to our interest expense. That is why, if we amortize premium, the credit would go to interest expense. Because if you may notice, no, debit tayo ng 400, then per amortization of the premium, credit ng 40,000. So that is a deduction to our interest expense. Diba? So in essence, if we are to be asked, okay, how much was the interest paid on this particular bond issue, okay, or how much is the interest paid or to be paid on this particular bond issue, the answer would be 400,000. Okay. However, if we are to be asked, how much is the actual interest expense for this particular bond issue in the first year or as of December 31, 2020, then obviously the answer would be 360,000. Now remember that, because interest paid again is different from your interest expense when it comes to bond issue, especially if there is a premium. Now, if there is no premium or discount, obviously, interest expense is based on your interest payment, which is based on nominal rate. Okay? So, klaro yun siya. Okay? So, now, after amortizing your premium ngayon, okay, after amortizing your premium, at the end of, or on December 31, okay, 2020, okay, on December 31, 2020, your bonds ngayon would be presented, or the carrying amount of the bonds, okay, the carrying amount of the bonds ngayon will be presented as the face amount of 5 million, okay, the face amount of 5 million less your, or sorry, add your premium on bonds payable, which is on December 31, 2020, we started with 200,000, then we amortized 40,000, is now only 160,000. So the carrying amount of your bond would be 5,160,000. Okay, this is your carrying amount. Again, if we are to be asked on December 31, 2020, what is the face amount of the bond, it is still at 5 million because there was no payment. However, if we are to be asked what is the carrying amount, hindi na siya 5 million to 100, okay? But rather 5,160,000 because 40,000 is already amortized. Okay? It's already amortized. So, okay, next. So, on January 1, 2021, okay, which is the date of our first payment, now, the entry would just be basically as if, yun nga, nagbayad tayo ng utang natin for interest. So, debit, interest payable, credit, cash. Okay? Debit interest payable, credit, cash. Okay? So another illustration. Recording bonds at a discount. Okay? So, with the same example, except that instead of 104%, okay, instead of 104%, okay, tama, instead of 104%, we issued the bond at 98%. So, again, at 98, obviously, this is a discount. So, to compute for our issue price, okay, to compute for our issue price, um, face amount, okay, face amount of 5 million multiplied by 98%. So, the issue price in this case is um, 5 billion times 0.98. So that is 4,900,000. We have a face amount of 5 million. So we have a discount of 100,000. Okay? So to recognize that sa entry, debit the proceeds cash at 4,900,000. Okay? Then debit the discount. Okay, sorry. This is typo error lang ha. Dapat dito to siya sa debit. Okay, debit 100,000. Then credit your bonds payable at 5 million. Okay? So again, debit cash at 4,900,000. Debit discount of bonds payable na 100,000. Dapat dito yan siya. Okay, dapat dito. Then credit bonds payable at 5 million. Okay. Now, to recognize the accrual of interest on December 31, 2020, same entry lang tayo as if sa premium na debit interest expense at 400,000, credit interest payable. Okay? In amortizing the discount, okay? In amortizing the discount, again, straight line computation muna tayo ngayon. 100,000 amount of the discount divided by 5 years. So annually, we are to amortize the discount by 20,000 each year. Okay? So to recognize that in the entry, okay, debit interest expense 20,000, credit discount on bonds payable. So again, discount on bonds payable, okay, discount on bonds payable increases your interest expense. Okay, kasi nga, 'di ba? Instead na 5 million yung face amount mo, yun yung babayaran mo, nag-accept ka lang ng pera which is lower than that 5 million. That is why it is issued at a discount. Okay, it is issued at a discount. So the difference between, or the discount, which is basically the difference between the issue price and the face amount, is your additional interest expense. That is why, okay, na in amortizing your discount, debit interest expense, to imply that because of the discount, may additional interest expense ka annually. Then credit your discount at 20,000. Okay? So again, on December 31, 2020, the carrying amount basically would be computed as your face amount at 5 million less the balance of your discount, which is 80,000. So that would be 4,920,000. So again, our discount, we started with 100,000. and we amortize 20, so the balance of our discount ngayon is only 80,000. Okay? Is only 80,000. So medyo madali pa lang siya so far. Okay? Medyo madali pa lang siya so far. Now, the next accounting issue that we might encounter on initial recognition of bonds, okay, is, yun nga, what if a bond is issued between interest dates? Okay, what if a bond is issued between interest date? So, let us recap on what we have learned on our first discussion. Okay? So, di ba, um, a bond issue basically, meron tayong tinatawag na bond date or date of the bonds. Di ba? Date of the bond. Now, again, on this date, dito magsisimula yung term mo, and this is also the date where your interest will start to accrue. Okay? Will start to accrue. So, example lang, okay? Example lang is that in this given illustration, no, we have a 3-year bond, okay? Which is dated, or the bond date is January 1, 2020. Okay? And it pays interest every semi-annually, every January 1, okay? Every January 1 and July, no, that is not June, that is July 1, okay? So it pays interest every January 1 and July 1, okay? So, now, if this bond is issued, okay, if this bond is issued on January 1 or July 1, okay, the issuance basically is issuance on interest date. So, kumbaga, parang normal issuance tayo dito, no? Normal recognition. Walang masyadong complexities because, again, it was issued on January 1 or on interest date. Okay? Now, the problem may arise on this particular situation if we are to issue bond, okay, we are to issue bonds in between this period, okay, in between this period, because again, if we issue bonds in between interest date, there is a certain portion na, okay, there is a certain portion na which has already accrued interest, okay, which is already accrued interest, and yet that particular portion, okay, is still not covered by the issuance, because again, after these dates pa tayo naka-release ng bond, di ba? So however, tayo as issuer of the bonds, we are required to pay the full interest. So kumbaga, if someone will invest in our bond and it was issued in between interest date, we are to pay the full interest for that particular issuance. So in this example, for that 6 months, and yet the bond is issued less than 6 months na yung cover pa. Okay? So there is an accrued interest. So the point is, yung investor ngayon supposedly hindi niya dapat tatanggapin yung full interest. However, because we as the issuers required to pay the full interest per agreement, per detail of the agreement, si investor ngayon marireceive na yung full interest na for that 6 month period is particular example. So, kumbaga, on the date of issue, si investor ngayon, okay, si investor ngayon is that, babayaran niya, in substance, babayaran niya yung interest na marireceive niya for that period na hindi pa siya yung owner ng bonds or yung accrued interest period. Okay? Yung accrued interest period. So, in this particular example, no, okay, for us to understand it clearly. So, di ba yun nga, interest is paid or the bond is dated January 1, 2020. Then, the bond should pay or the interest is paid every January 1 and July 1. Okay? If the bond is issued, example lang, okay? If the bond is issued, let's say, issued siya August 1. Okay? Issued siya August 1. So that means, from the date of the latest interest that should have, that the date of the latest interest na dapat mayroong payment, which is July 1 and August 1, there is now a difference of 1 month. Diba? Which is, meron nang nag-accrue na interest for 1 month. So the point is, si investor ngayon for this particular issuance is, although nag-invest siya August 1 lang, okay, he has the right to receive the interest from July 1 to December 31. Pero yun nga, nag-invest siya or the bond has been issued on August. So kahit pa ganun, cover pa rin niya yung full 6 months. So, in essence, investor ngayon, okay, in substance, babayaran niya itong 1 month na interest. Okay? So that is why, if there is a bond issue in between interest date, basically meaning there is an accrued interest date, the issue price of the bonds payable, okay, should always include accrued interest. Okay, or meaning, in simple terms, the total cash to be received if there is an issuance between interest date is that it is equivalent to the issue price plus accrued interest. So that is your total cash to be received. Meaning, yun nga, as if the investor refunds the issuer for the interest na matatanggap niya in full. Yung period lang na hindi pa siya yung rightful owner. Okay? So to illustrate, we have this exercise, okay? On August 1, 2020, okay, the entity issued a bond with a face amount of 4 million at 109%. So meaning, pag 109% siya, there is a premium. Diba? Kasi higher than 100. So there is a premium. Plus accrued interest. So, the bonds are dated January 1. This is the bond date. Matures in 5 years. And pay interest at 10% semi-annually every January 1 and July 1. So yun nga, the date of the latest payment of interest is July 1, August yung issuance, okay? So there is a 1 month na accrued period. And by the way yung basis natin sa accrued interest basically is the date. Okay? Is the date of the latest interest payment. So in this particular case, not January 1, but July 1. Okay? The date of the latest interest payment. So if we are to compute that, the first thing that we need to do is to recognize or to compute how much is the accrued interest. So, face amount multiplied by the nominal rate multiplied by the accrued period, which is 1 month lang divided by 12. So, our accrued interest basically is 33,333. Now, to recognize or to compute for the total cash to be received, okay, again, that is equivalent to your issue price plus accrued interest. So, 4 million times 109%, so that is 4,360,000. Diba? So, 4 million times 109%, so that is 4,360,000. Plus the accrued interest na 33,333, the total cash to be received basically is 4,393,333.33. Okay? So the premium of bonds, okay, do not be confused. Okay, do not be confused. The premium of bonds is still computed as the face amount versus your issue price, which is in this case, that is the 4,360,000, not the total cash to be received. Okay? Again, any premium or discount when bonds is issued between interest date, okay, any premium or discount is still computed as face amount versus the issue price, not the total cash to be received. So in this particular problem, again, we have a premium of 360,000. Okay, that is our premium. So on August 1, 2020, this would basically be our entry. Okay? Dash for the total cash to be received. Credit bonds payable, again, at face amount. Then, the premium at 360,000. Then, credit to your interest expense at 33,333. So, notice, no? The accrued interest, okay? The accrued interest is credited to interest expense. Kasi nga, again, yung understanding natin dyan, sa payment natin na ma-receive relating to the accrued interest is that it is a refund on our part, because yun nga, on the date of interest payment, we are to pay the investor at full. Kahit na within the month lang siya considered as the owner of the bond. Okay? So, i-refund lang niya tayo dun sa ibabayad natin na accrued interest sa kanya. Okay? So, that is how we are to recognize bonds on initial recognition. Okay? On initial recognition. So, ngayon, we are to discuss na accounting for bonds, subsequent recognition or subsequent measurement. Okay, subsequent measurement of bonds. Okay. So again, now, diba there are two types, or again, bonds in general. Okay. There are two approaches available for us on how to present bonds. Okay, di ba? We have the fair value option and we have the amortized cost. Okay? So we have the fair value option and we have the amortized cost. Okay? So um we will first discuss, okay, presentation of bonds through amortized cost. Okay, later on we will also discuss the fair value option, but we will first discuss the amortized cost because again, in general, this is what is very common in actual and what um, this is a common problem na also lalabas din sa ating board exam, no? So let us focus first sa presentation amortized cost. Okay? So if we are to present a bond through amortized cost, okay? Through amortized cost, um, Philippine Financial Reporting Standards 9 is requiring us, okay? Is requiring us no other methods, okay? Na amortized cost daw should be presented using the effective interest method. Okay? Using the effective interest method. So, walang straight line, walang, or there are no other methods. Effective interest method lang. Okay? So, yung kanina, yung discuss natin na straight line, that is for discussion purposes only. So that para maintindihan lang natin ng mas madali yung concept. However, what is required by the standards is to use the effective interest method in amortizing bond if that bond issue basically is presented at amortized cost. So ano ba itong effective interest method? So basically, an effective interest method of amortization class, kumbaga, gagawa lang tayo ng table of amortization wherein, okay, makikita natin yung movement ng carrying amount at yung mga effect ng any premium or discount such that if we are to look at our effective interest schedule, amortization schedule, at the end of the term per plotting, okay, at the end of the term per plotting, the carrying amount would be equal sa face amount. Okay? Would be equal sa face amount. So, under sa effective interest method, ito yung mga data na makikita natin. Okay? Effective interest method amortization schedule rather. Ito yung mga data na makikita natin. So, mayroong date. Okay? Mayroong date. Yung date na makikita natin sa effective interest method amortization schedule is number 1, magsisimula siya sa bond date or yung date of the bond. Again ha, date of the bond siya magsisimula and not, okay, and not sa issuance date. Because yun nga, again, there are certain issuances after the date of the bond. Diba? That's what we have previously discussed. So the effective interest method, the effective interest amortization schedule should start with the bond date or date of the bond. Okay? Not the issuance date. Subsequent dates na ipa-plot natin is yun yung principal payment if the bond is a serial bond and the date of interest payment. Okay? So, yun yung mga date. Okay? That is one column doon na makikita natin. Another column is yung principal payment. A portion or a column na kita natin na yung regular payment ng principal. So, kung serial bond siya, okay, kung serial bond, each date na na-plot, merong principal payment supposedly pag serial bond. Pag term bond, wala. Kasi yun nga, one-time payment lang yung term bond. Interest payment, okay, interest payment is that the column where makikita natin kung magkano yung interest na babayaran or nabayaran na, which is basically based on your nominal rate or stated rate. So again interest payment or paid based on nominal rate. Okay? Based on nominal rate and based on face amount. So kumbaga, simple interest computation lang. PRT. Principal, which is your face amount, the rate, which is the nominal rate, and the time, accrued period of interest or the period of interest. Diba? Now, there is also a column for interest expense. Kasi nga, diba, again, as earlier stated, interest expense is different from interest payment because of the effect of premium, discount, or bond issue cost. So ngayon, meron din tayong separate column dyan per effective amortization schedule. Okay? The interest expense is computed per effective schedule, interest schedule, as carrying amount. Okay, hindi face amount carrying amount multiplied by effective rate multiplied by time. So parang nominal, parang interest payment lang din, except that our basis is the carrying amount and the effective rate. Okay? So, yan yung interest expense natin. The next column na makikita natin sa ating effective interest schedule is yung amortization of the premium or discount or bond issue cost now. So, the amortization of the bond issue cost, premium or discount is basically computed as interest paid minus interest expense. Okay? Or basically, the amortization is the difference between interest paid or payment and the interest expense. Okay? So, yan yung amortization. And the carrying amount basically is the carrying amount is the, di ba, based na nakita natin sa ating mga previous illustration, di ba, that is the face amount, okay, less or add any premium or discount. Yan yung pag-compute natin dyan. However, for us to easily plot it sa ating effective schedule is carrying amount, obviously, magsa-start yan siya kung ano yung issue price of the bond on issuance date. Okay? Kung ano yung issue price. Now, any carrying amount, okay? Any carrying amount, pag mayroon na tayong amortization of premium or discount, is that the amortization of discount is added. Okay? Amortization of discount is added sa carrying amount to get your current, okay, to get your current carrying amount. Current carrying amount. Any amortization of premium is deducted sa carrying amount. Okay? So again premium, okay? Premium amortization, okay? How to remember this, is added. Is any premium amortization is deducted. Any discount amortization is added. Kasi nga, ang point natin in every effective interest schedule is to make this carrying amount, okay, to make this carrying amount equal, okay, to make this carrying amount equal sa face amount at the end of the term. That is why any premium amortization is deducted, any discount is added. Okay? So later on, makikita niyo yung effect niyan. Okay? So, let us go with examples, no? Let us go with examples. So, our first example here, okay? Our first example is ito yung situation, okay? A bonds payable, okay, with annual interest payment, so discount. Yung issue price is hindi stated now. In this particular illustration, dito natin ma-apply because issue price is not stated. We should compute for the present value using present value factors as discussed, diba, from our earlier discussion. Okay? From our earlier discussion. So, kasi nga, diba, issue price is equivalent to fair value or present value on the date of issue. So, the issue price basically is computed, can be computed if it is not stated as the present value of the bonds on the date of issue. However, in this particular example, medyo pinahirapan tayo kasi nga yung present value factor is hindi siya given. Although dito, given just sa solution analysis lang, but when this exercise is given, wala siyang present value factor. So we need to compute for the present value factor, which is nalaman na rin natin on how to compute it manually using a ordinary calculator, di ba? So again, now, first, let us know on what type of bond is this, okay? So, based on this illustration, okay, this is basically a term bond kasi walang statement na nagsasabi na there is an annual regular payment for the principal. So this is a term bond. So again, pag term bond siya, present value of the bond, diba, is equals to present value of, diba, principal plus present value of interest. Okay? Present value of principal plus present value of interest. Which, if we are to compute, okay, if we are to compute for the present value of principal, diba, that is face amount multiplied by present value of one factor, which in this case at effective rate na 11% for 3 years. So, we need to first determine this factor. Okay, we need to first determine this factor. So, yun nga, nakita natin dito sa solution and analysis natin na yung present value factor niyan of 1 at 11% for 3 years is 0.731. So, paano natin yan siya kinuha? Okay? So, we'll use our ordinary calculator, no? So, again, 11%. So, that would be 1.11. First step natin. Division sign twice. 3 years siya. So, 3 presses for your equal sign, representing the end periods of 3. So, hindi pa dito magsisimula yung counting kasi yun nga hindi pa to decimal, di ba? So, that is 1, 2, 3. Okay? So, the present value factor is 0.731. Okay, round to the nearest 3 digits lang. Okay? So, ito yun. Kuha nyo. So, the present value factor or the present value of principal, basically, face amount na 1 million multiplied by your present value factor of 0.731. So, that is 731,000. Okay? Next is the present value of interest. Okay, the present value of interest. So again, the present value of the interest is your regular interest payment multiplied by present value of an ordinary annuity, di ba? Kasi nga, interest is a cash flow which is uniform and multiple. Diba? So, applicable yung ordinary annuity natin dyan. Ordinary annuity of 1. So, but still, at 11% for 3 periods. So, in our solution, that is 2.444. So, paano natin kinuha yan? So, again, di ba this is our present value of 1 at 11% for 3 periods. So, to get your ordinary annuity, the next step is minus 1. Diba? Then, divide with your effective rate, which is 11%. So, disregard the negative sign. Okay, disregard the negative sign. So, you have 2.444. So, rounded to nearest 3 digit. So, the present value of your interest payment, that is 90,000, which this is your regular annual payment, multiplied by the present value factor of 2.444. So, we have 219,960. So, ngayon, the present value of the bond is basically computed as the present value of principal and the present value of total interest. Sum. Diba? So, we have 950,960. So, with that, face amount of 1 million less the present value or the issue price or the fair value na 950,960, we have a discount of 49,040 pesos. Diba? So, simple lang naman siya, diba? If we know the concept of present value and if we know how to compute for the present value factor. So, to record that, okay, on the date of issue, which is January 1, 2020, debit cash, which is yung present value natin na 950,960, debit, obviously, your discount na 49,040 pesos. Then, credit your bonds payable at 1 million. Again, always credit your bonds payable at face amount. Okay? So, now, the next step is to prepare your effective interest schedule. Okay? to prepare your effective interest schedule. So which basically would look like this. Okay? Which basically would look like this. You have your column for dates, you have your column for principal payment, you have your interest paid, interest expense, and your amortization of discount, and your carrying amount. Okay, and your carrying amount. So basically, again, we will start with your bond date or date of the bond, which in this case is, in this particular example, same siya sa date of issue natin. Okay? Same siya sa date of issue natin kasi nga, interest is annual yung payment nito. So, kumbaga, yung assumption is same siya sa date of issuance natin. So, the first row, date of the bond, then your initial carrying amount, which is yung initial carrying amount natin, di ba, is ito, yung fair value or yung issue price. Okay? So, ito yun. Now, on January 1, 2021, which is the date of the first interest payment, 90,000, which is, di ba, ito yun, the face amount multiplied by your nominal rate, that is 90,000. Okay? Yung interest expense, ito, this is basically computed as your carrying amount, okay, multiplied by your effective rate, which is, okay, your carrying amount, that is 950,960, okay, that is 950,960 multiplied by your effective rate of 11%. So that would be, okay, 950,960 times 11% effective rate, that is 104,605.60. So that is your interest expense. So nakuha niyo yun? Carrying amount multiplied by your effective rate. So 104,605.60. So the discount amortization, okay, the discount amortization is the difference between the two. Okay, difference between the two. So that is 14,605.6. Yeah? So 104,605.6 minus 90,000. So that is 14,605.6. So again, okay, discount, amortization of discount is added sa carrying amount. Kasi yun nga, yung point natin dito sa effective amortization schedule is that at the end of the term, dito sa January 1, 2023, yung carrying amount na natin dito would be equal sa face amount. Kasi yun nga, it should be that at the end of the term, yung carrying amount natin should be 0. So dapat, at the end of the term, okay, at the end of the term, after payment, magiging 0 na siya. So, we have to remember na on initial recognition, the discount or the carrying amount, if there is a discount, is lower than the face amount. So, any amortization is added para maging equal siya to 1 million. Okay? Para maging equal siya to 1 million. So, that is your effective interest amortization. So, ngayon, pag nagawa na natin ito, magiging madali na lang sa atin yung recording. Okay? Kasi yun nga, for, let's say on January 1, okay, on January 1, 2021, the first date of interest payment, okay, we are to debit interest expense at 90 credit cash for the interest paid. For the amortization of discount, again, because discount to debit interest expense, credit discount on bonds payable, which is yung amortization natin per schedule, which is on January 1, 2021, itong 14,605.6. Diba? Madali na lang. On January 1, 2022, the next year na interest payment, same, debit interest expense, credit cash at 90,000, credit amortization of discount at 16,212, ito per schedule. So again, tinidak lang natin yan siya, or we have just compared the payment versus the interest expense. Okay? Now, on the third year, record the interest payment again at 90, which is based on nominal rate. Then,
Order na sa Shopee, sa Shopee.
Then, the amortization of discount per schedule. Okay? Which is itong 18,222.18. And by the way, class, baka medyo magtaka kayo bakit pag i-multiply natin ito, yung carrying amount on January 1, 2022 by 11%, hindi ito yung answer. Okay? Parang 107,995.656 yan siya. In-adjust ko na lang ito, okay? Para maging exact talaga yung amortization schedule natin na 0 siya at the end of January 1, 2023. Kasi yun nga, yung difference niyan is just caused by rounding off differences. Okay? Rounding off differences lang yan siya. So, yun. Okay? Then, kasi nga, ito na yung expiration ng term natin. On this date, mayroon na tayong payment na 1 million, which is to simply debit bonds payable, credit cash at 1 million. Diba? Madali lang siya if alam natin yung concept ng present value and how to get the present value. Okay? So, we'll cut this video kasi medyo mahaba na. So, another video na naman tayo for illustration 2, ha? Okay? So, see you in the next video.